Welcome back to Duke of Scompy TV. I'm Darren McDermott. I have Vu-Hoang Lee with me today from Peak Partners to have a look at some currency pairs. So welcome today.
Thank you, Darren.
Now, it was quite interesting. Last week, currency speculators went short or bet against the US dollar. Now, this was the first time since mid-February. So why was this, and what sort of trends are we seeing now?
Last week was about the shutdown in the US. So basically, currency pairs were trending into ranges, tight ranges in most of the USD related pairs. And when the solution or the apparent solution or an agreement was reached to extend the budget for February 2014, then it was the occasion for a lot of currency pairs to evaluate against the US dollar. What we're basically seeing is, if we look at most of the current pairs, currency pairs against US dollar, let's have a look at Euro USD. Before going into, let's say, into very short-term perspective, let's try to keep in mind the long-term structure of the currency pairs. Now we have a look at Euro dollar. Basically, you will see that it's being divided into two big periods, before 2008 and after 2008. What you can see is, before 2008, it was more or less a straight bull from euro. After 2008, what we are starting to see is a very interesting pattern. Lower lows and lower highs. And what you can see here is that the dynamic support on the top here, that's taking the maximum, is bearish. And at the same time, the lows are being attacked every day, every month, and every year as well. So basically what you see here is, last year was 120, around 120.40, 120.60 for euro dollar. This year, apparently, the bottom has been found around 127.80. So what you see is that you have cycles for the past 5 years, cycles of 6 months, where the first 6 months would be a depreciation, where euro dollar will find a bottom, the lowest point in the year, and after the next semester, then it will try to go higher. But every time it recovers, it will go lower, as you can see here. Have a look at cable, for example. What you can see here is cable has roughly the same structure as euro dollar, and that's why, when you trade, you consider that a lot of those are correlated. Before 2008, a bull, and I'm talking from 2001 to 2008, and after 2008, then the currency pair starts to devaluate, and now it's consolidating below the 50% range of 2008 here. So what you are seeing here is basically a tight range for the past 4-5 years. We're currently expecting a breakout because of the structure of the euro dollar. We are more inclined to talk about a breakout on the upside. But so far, what you can see here is, the market is quite undecided right now. Let's have a look at USD yen. USD yen, if you look at very long-term perspective, since 1998, it's been bearish. And that's what I guess a lot of traders maybe tend to forget or oversee, is basically what they saw recently was that the USD yen was soaring above 100. And for now, you can see that there's a formation of the top resistance being at around 102.40, and even 100 seems to be quite far away now. So we are in favor for USD yen of bearish formation in a very long term. What you can see as well is, when you have those long-term structures in mind, basically, when you see the move from the past week and the move from this week, it is actually not really a surprise. If we remember what I said about euro dollar, we are currently now sitting at the second semester, the second part of the year. after 127.50, it has been trying to reach higher. This month, actually, it went into the trouble about the shutdown in the US, and the currency pairs, most currency pairs like euro dollar and cable, sold against US dollar. But then, currently what we are seeing this week is actually a reversal. And is it a reversal for, let's say, a long-term reversal? I'm inclined to think no, because basically, can we have a look at euro dollar weekly? What you can see, it's moving forward. It's going bullish right now. Most of the move that you're seeing in the weekly that is going down back to 135 and 134.80 was basically what we call a technical readjustment. Basically, you have the end of the month, you have Friday, and the end of the year is approaching. So basically, this move that you're seeing is it's a taking profit for most of the people who were long, but in essential, in terms of market structure, it is people are still going to be buying above 134.80.
Now I'm going to bring up the weekly for the cable. So what sort of impact did the 16-day shutdown have on this currency pair? How is it trading now, and when do you actually expect tapering to begin?
Well, basically, it's a very good question. Cable has been a bit ambiguous in the month of October. It was trading at very tight ranges, just like euro dollar, until the shutdown got a final apparent resolution for February 2014. So basically, if you go back to the definition of the shutdown, is basically the possibility to extend the budget, meaning the extend the debt of the US for next year. When that happens, it means that a lot of players will be betting against the dollar. So they will be buying, they will be long on cable. If you have a look at, for example, Euro GBP, Euro GBP did not get very, let's say, lucky, because it got the influence of euro dollar, noises and rumors about the ECB being dovish and possibly cutting the rates. So when you have Euro GBP going down, you have cable massively going up, because GBP gets strength from the loss of euro dollar, and the USD Swissy reversing as well. So the shutdown basically, as a result, made the cable pair go above 162. It went to 162.40. But because of its structure, it had to follow the euro dollar. And what we are seeing for the past 2 days is basically that it's reversing the bet again. But once again, it does not question the bullish stance for now of cable. Yeah, just to get back to the tapering. The tapering, I believe, is going to be delayed and postponed because of the trouble that the shutdown has caused in the U.S. economy. Basically, if you do the tapering at the same time, not only is it going to be a mess for the financial markets, but it is going to be a mess for the companies, for the economy. So I believe that as soon as the shutdown is approved and applied, because we haven't solved the US crisis yet, the tapering then can take place. And because of that, I don't believe that it's going to take place before March 2014.
Thank you very much for coming in today.
My pleasure.
And thank you for watching Dúchascalpaí TV. Do stay tuned as we have plenty more coming up. See you soon.